Welcome to This Explainer. Look, if you've glanced at any financial news over the last 5 years, you already know we're right in the middle of an absolute blockbuster gold rush: artificial intelligence. The sheer volume of cash flooding into the tech sector right now, it's honestly unlike anything we've seen since the early days of the internet. So today, we're cutting through all that endless noise. We're going to figure out if you've completely missed the boat on this massive generational wealth shift, or if the tide is really just starting to rise.
And this brings us to the exact question everyone is asking. Should I invest in AI stocks? Seriously, it absolutely dominates the conversation right now. You know how it is. You hear coworkers casually bragging about their tech portfolios, you see neighbors suddenly upgrading their lifestyles, and the headlines, they are just relentless. Watching the market transform this rapidly right in front of you naturally triggers a huge psychological response. It is so incredibly easy to catch a bad case of FOMO, that fear of missing out, especially when it feels like literally everyone around you is winning a lottery that you didn't even buy a ticket for.
So where is all this intense anxiety actually coming from? Well, let's dive into this specific number. Because back in 2015, NVIDIA stock was trading at a split-adjusted price of just around $2 a share. Fast forward to today, it has skyrocketed to a staggering $120. Just let the sheer scale of that growth sink in for a second. An asset going from $2 to $120, that fundamentally rewrites the financial reality for anyone who is holding it.
That transformation represents a jaw-dropping 6,000% gain over the last decade. To put that into perspective, the vast majority of everyday retail investors unfortunately completely missed out on this initial explosion, right? They looked at NVIDIA, saw a company mostly known for making graphics cards for video games, and they simply didn't realize they were looking at the foundational engine that was about to power the entire AI revolution. But hey, we're not here to dwell on missed opportunities. We are here to deeply decode the mechanics of this boom so that you are perfectly positioned for the next phase.
Okay, moving on to Section 1, Big Tech's AI drivers.
Now, what's really fascinating is understanding exactly why this mass adoption is accelerating so fast right now. This acceleration isn't just magic. It's the result of highly calculated infrastructure bets by the biggest companies in the world. Let's look back at 2019. Microsoft fundamentally shifted the whole tech landscape by placing a massive initial bet on OpenAI. That early partnership secured exclusive computing rights, giving Microsoft a crazy first-mover advantage in baking AI into global enterprise software. Fast forward to 2022, and we see Broadcom experiencing a massive surge in demand. See, Broadcom doesn't just make generic tech. They design the hyper-complex networking chips that data centers absolutely need so thousands of AI processors can actually talk to each other without bottlenecking. And moving right into 2024, you've got companies like Tesla drastically heightening their focus on applied AI to solve huge real-world problems, like full self-driving. So software, critical networking infrastructure, and real-world application, these are the three main pillars fueling this massive market shift.
Which brings us to Section 2, Real Returns and the Numbers. Let's see how all this builds into actual wealth generation, because the difference here is just staggering. Check out this crucial point. A $1,000 investment in NVIDIA 5 years ago aggressively compounded into $60,000 today. $60,000. That is an explosive, life-changing return for a pretty small initial allocation. Now, if you took that exact same $1,000 and put it into the QQQ ETF, which, by the way, tracks the NASDAQ 100 and is already super heavy on the broader tech sector, it still yielded a very respectable $2,800. Nearly tripling your money in normal market conditions is fantastic for sure, but comparing the two just really illustrates how wildly these pure AI infrastructure plays have outpaced even the most aggressive broader tech funds.
But here's the thing. Seeing those massive historical multipliers can be really dangerous. It can seriously trigger that FOMO and tempt you to just throw all your savings at the next hot ticker symbol. But remember, a 6,000% gain is history. It is absolutely not a guarantee for tomorrow. As smart, prospective investors, we've got to separate sustainable, realistic growth from sheer market mania. We have to ground our expectations in conservative estimates moving forward, rather than blindly buying into the hype cycle and expecting instant miracles.
All right, Section 3, Investment Strategy. Stocks versus ETFs.
If you're looking to start out, especially with smaller capital, you really need to understand the different investment vehicles available to you so you can participate safely. You essentially have two distinct paths here. On one hand, you can pick individual stock tickers like NVIDIA, Microsoft, and Tesla. These offer tremendous upside, sure, but they carry incredibly high risk. If their earnings reports miss expectations by even a fraction, bam, your specific portfolio takes a direct, concentrated hit. Alternatively, you have broad tech ETFs. These bundle the big titans together alongside dozens of other companies, acting like a structural shield. You still get to capture the macroeconomic upside of the AI revolution, but you dramatically lower your risk by insulating your money against any single company's failure or some random executive misstep. It's lower risk, but still offers steady, good returns.
Moving to Section 4, Market Realities and the Risks You Face.
Before allocating a single dollar, we need to take a pretty sobering look at the market realities and the specific risks you've got to navigate. First off, we have to acknowledge that valuations are already incredibly high. Current price-to-earnings ratios are sky-high, meaning a lot of that anticipated AI success is already baked into today's share prices. Second, aggressive competitors like AMD and Intel aren't just sitting still. They're pouring billions into R&D to actively catch up, which will inevitably start squeezing those massive profit margins. Third, regulation risks. Governments are moving fast. Things like the EU AI Act and mounting U.S. antitrust probes into major tech players represent massive regulatory hurdles. Combine all of this with the ever-present threat of a macroeconomic market correction, and it becomes crystal clear why solid risk management is completely non-negotiable. And that leads us to Section 5. Building your investment plan. So, let's pivot from looking backward at historical data to looking forward, arming you with a definitive long-term action plan. If you take nothing else away from this explainer today, please internalize this one mantra. Don't chase stocks, build a plan. Small money, long time, and consistent investment beats timing the market every single time. This is exactly how you manage risk. It's your anchor, reminding us that a grounded, disciplined strategy will always beat the anxiety and the super high failure rate of trying to perfectly guess the market's unpredictable peaks and valleys.
To safely and responsibly get off the sidelines today, just follow these 3 definitive steps. First, invest small money. Start with capital you can actually put to work without losing sleep over it. Second, keep a long time horizon. We are talking in terms of years here, not weeks, giving the technology time to fully mature and integrate into the global economy. And third, utilize dollar-cost averaging. Since AI stocks are notoriously volatile, this is your best structural defense. By automating your investments at regular intervals, no matter what the daily ticker price is doing, you completely remove emotion from the equation and stop yourself from panic buying at the absolute peak of a hype cycle.
You now have the framework and the data to cut through the noise and transform from a reactive speculator into a disciplined investor. But it does leave us with one final, critical question as we look toward the next decade of market evolution. Are you thoughtfully investing in the fundamental future of technology, or are you just buying into the hype? I'd love to know how you're applying this framework to your own portfolio. Which AI stock are you currently watching? Let us know. Stay curious and invest wisely.